Welcome back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, give yourself a thumbs up. If not, consider subscribing. We're gonna start with SPY, then go GameStop, AMC, PLBY, and we'll look at some other stuff too. I was digging through some old charts and I came across this particular drawing, which I did way back when, probably before the start of the year, to be honest. I want to say that I would have, at the very latest, come up with this probably in January. It's a symmetrical triangle, and it shows a target at 447, and we're seeing SPY push right up to that level now, which is insane. We're not quite there. These price targets, they're derived from a statistical analysis that Bukowski does. He says, hey, you have a pattern meeting such criteria. Upon a breakout, you're going to apply such average, and that's the probable peak, or the probable target. And this is really where it's at. It's at 447, and the price is right there right now. I was just watching SPY rally today, as was everybody else, and it was just insane, right? It was just insane. On the minute time frame, we've got this big reach upward. I did a little bit of drawing here on the 1 minute chart, and it just kept going up and up and up and up and up and up. I was thinking we were in wave 1, 2, 3, 4, 5, but what happened is when wave 5 broke above that 441 level, this made wave 3 the shortest wave, which cannot be, which means we started a third wave extension. 1, 2, this would be all of 3, 4, and we're looking for 5 to top out. So there may even be one more high coming in here. This is insane. This is just nasty stuff. I was thinking that we would pop up for one more little high, but stay below that 442 level. Going above there is ridiculous. This is absolutely insane. The Financial Times and a lot of other media outlets have been covering the number of stocks driving the rally in this ETF, and that it's relatively few, which is very characteristic of a wave B in at the beginning of a bear market. We're not there yet. We've also had a big push down, and this has been a massive rally. It's a surge. But I don't think that we're out of the woods yet. The dollar took a huge spill today. That is wild. After yesterday's throw upward after the FOMC announcement, and now we've got just this massive three-wave structure pushing lower. Wild stuff. It's so convoluted right now. Market's just super confused. I'm gonna turn on a line chart here to kind of clean this up a little bit. You can see that coming down to 102.025. This is the extension from the initial push lower, and you'll notice on the line chart that a lot of these chart drawings don't make sense anymore, and that's because the line chart only takes the close of the candle, not the open, high, low, and close. Moving on from here into GameStop. We had a pretty bullish thing happen a while ago, a couple days, and since then we've seen the price begin to drop, going for that gap fill. If we can get back above the highs we said on June 13th, then hey, cool, we have some upward price targets. Otherwise, we have to start seriously considering that this may be over. This, however, does look like a nice flag. I mean, it's pretty cool, right? In fact, this might even look better in a line chart as well. I always like the line chart better, personally. Candles just give you a sense of bias with the red and the green. Yeah, this is a very nice high-end type flag. Let's just go ahead and supposing that we get a breakout above that 2750 level and that we've seen the low of the flag, we could be honestly targeting $31, $32, which is something that I've been saying for a while, but we've got to get above the significant high. That 2551 level is really clutch, and we just fell below it, which is a little disconcerting. We're going to need to see more volume in GameStop. You're going to see that it's starting to peter out here on the hourly time frame. Really, it's about the news. It's about media attention. It's about people buying into the idea that the GameStop will squeeze that sends the stock higher, I believe. Really, I do. And if we don't get those news events, or if GameStop falls out of the public view's eye, then we'll see the price continue to drop, and that won't be super popular. This is starting to look weird though through here. Maybe I even go into a new chart. I want to start connecting lows and highs. Is it possible that we're in some sort of triangle through here? Possibly 1, 2, 3, 1, 2, 3, 1, 1, 1. It's just like, what? How many waves are in there? I don't know. It looks like a straight shot to me, because it was a gap, that's why. Anyway, here we go. Going on to AMC. I don't want to linger too long in any one spot. Otherwise, the videos get lengthy, and that's not really what I want. I want to try to keep it short. AMC coming off of the highs with GameStop falling below $5, touching down at 461, finding support. Looking for 432, more 402, and then possibly 381. On our way there, slowly, just grinding along. Let's go look at PLBY, because PLBY is starting to look bullish, which is so great. We've had a falling wedge through here. The price broke out upward upwards and on some pretty good volume too, above that 30-period average. Today, we were also above that 30-period average, forming a bullish engulfing on the daily time frame. You can see that this green candle, it completely engulfs the prior trading, and we got a close above these prior days as well, which is also a pretty bullish thing. We haven't quite tagged that 187 level yet, but that's okay. Going into the hourly time frame and turning on a line chart, it gets really exciting. I'm starting to think that today's close may have confirmed the breakout that gives us the 209 target or the 234 extension, which would be fantastic. I could really use that. That'd be great. My calls are still down because they're, of course, 250 strike, and while the price is below that level, they will expire worthless. So I'm going to need to see the price push up a lot in order to bring value back into those calls, but the majority of my position is in shares. You're going to see that I have a bearish divergence through here. We've had the RSI dip below 50, but not come all the way to oversold yet. And so I'm going to extend this bearish divergence. Typically, when you see the bearish divergence, you get one more pop higher, or you get several pops higher. But the bearish divergence is the signal of an end of a motive wave. It may be on a smaller wave degree than the prevailing trend, in which case those bearish divergences set up, break, the new high comes in, and then you see a correction. The RSI is a great indicator. It really is, but you gotta use it with Elliott wave, I think, or you're just gonna be chasing this oscillator, and the price movements won't make sense. You can't chase it. You can't chase the RSI. You really can't. You have to know what the price is doing, and then look at the RSI, and then come up with some sort of hypothesis and conclusion. Moving on from there, I think that covers all of the bases, doesn't it? Let's go take a look at NVIDIA really quickly before we sign off for the day. Another good day for NVIDIA, pushing out above that earnings flag I was talking about. I was a little surprised to see it languish for a while before breaking up and out. Typically, when you see this sort of a flag appear and, well, the price starts falling below that prior valley, this is typically a bearish thing. We had a reversal, and closing above that 395 level, more above that 419 level, is really bullish, targeting 473 now. Wild. It's just wild. Let's go take a look at Tesla too very quickly. Tesla almost coming up to that 100% target at 26,702. We're getting there. That wasn't today though. I think this is actually a retracement onto the daily time frame. Right. We're not quite up there. Not quite. Volume is still pretty high. RSI is very high. And you're going to notice this, that when the price makes prolonged trends, that the RSI tends to move less. And that's because each move is relatively smaller to the larger move throughout the averages. So if we have a price trend of $100, that one, and the price bumps up $1, that $1 was more meaningful when the price was at, like, you know, was lower, was less. That makes sense? I'm not explaining that well. Yeah, it's okay. That's what I have for today. Try to keep it short. Happy trading.